My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I hope you want to make friends. I'm just trying to make you some money and put this one in context. My job is not just to entertain you, but to educate, teach you. On a day like today, you need it. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Not possible. Dow 30,000. Can't be. On the eve of a massive super spreader event, at a time when our hospitals are packed with COVID patients and we're barely keeping new cases under 200,000 a day, this milestone seems downright crazy. But after another terrific day where the Dow surged 455 points, S&P jumped 1.62%, and the Nasdaq gained 1.31%, I am telling you that this surge to 30,000, don't look at it that way. So how do we explain this raging bull market? You know what? Let's just go right to it. No more nonsense. I'm going to give you 10 tipping points, okay? 10 reasons why this thing's working. Not all of them are going to hold up over time. But you got to know what the tipping points were to get to 30,000. First, we finally got certainty in the election. Results won't be overturned. With President Trump filing suit after suit and the judiciary stuffed with Republicans, there was a slim chance he'd be able to beat Biden in the courts, if not the polls. But he couldn't pull it off. At the end of the day, there just wasn't any fraud. So when the president lost his lawsuit in Pennsylvania this Saturday, the jig was up. No constitutional crisis, no problem. Tradition, transition. Second, the vaccines. Well, we got one vaccine with 95% efficacy from Pfizer. Well, maybe they just got lucky. And then we got a second one similar. Well, it made us feel better. But then this week, AstraZeneca also reported strong data for its vaccine candidate, and three's a charm. Among the three, it's possible that I think when I put the pen to paper, 100 million doses for the United States, maybe even by year's end if they get the delivery right, which they probably will, although the actual distribution at the end is going to be difficult. That's spectacular. And we have to hope that the supply chain to the first responders, then the nursing homes, and then you get it to the pharmaceutical level without too much trouble. Now, all year, what have I been saying? I say, trust the scientists, and that bet's paying off. Tipping point number 3, COVID is raging now. Once we get vaccinated, we can reopen the economy. And remember, the market always looks forward, so this isn't a fool's errand. It's almost a foot race between the virus and the vaccine. We're cutting a little close for my breath. I mean, the accoutrements of COVID. But soon enough, we'll be able to get back to normal. So the hardest hit stocks are making a huge comeback. And there you have to think about the airlines, the hotels, the cruise lines, or national restaurant chains like Darden, Cheesecake Factory, that will come out stronger than ever because so many of their smaller competitors are going under. Disneyland can reopen. The marginal retailers like Macy's and Kohl's don't seem so marginal anymore. They can survive, maybe even thrive like a Nordstrom tonight. People will be able to shop again, and that's why Simon Properties for the best remaining mall real estate goes higher. Federal Realty for shopping centers. Now, don't forget this, Alphabet. Okay, that's the parent of Google. They get a boost once the travel and leisure industry starts advertising again. It's been their principal source of growth. Tipping point number 4. The pandemic has lasted so darn long that people keep fleeing cities for the roomier houses in the suburbs of the country. They're buying homes out of there, and they're remodeling extra bedrooms into classrooms, entertainment centers, and offices. That's still driving incredible sales for the likes of Home Depot, Lowe's, Williams-Sonoma, Stanley Black & Decker. Same goes for Whirlpool. Boy, are they in short supply. Walmart, Costco, Target, Amazon, and yes, even Apple. Remember last night with Larry Williams? Boy, that was a trade that's already started paying dividends. Look, the weaker, more troubled retailers right now are having their day in the sun. But if the current outbreak keeps getting worse, I'm telling you, we're going to revert. We're going to swap back into the major players, the essential retailers, until the vaccine's actually in our veins. Still, I think the home builders, all the housing-related retailers, they can have room to run as long as rates stay low. Plus, when you move away from the city, you need a car, hence the strength of the whole auto complex, including everything that goes into them. Think Illinois Toolworks, DuPont, NXP Semiconductors. All the dealers. Remember we had Lithia? I like those guys. Yeah, Carvana, what can I say? Tipping point number 5, the search for the next Tesla. Now, there's a whole generation of mostly younger investors who've seen this unbelievable run in Tesla. It may be the greatest growth story ever. So they're buying its stock. But they're also going after the derivatives, the Chinese Tesla, the hydrogen engine Tesla. We have the Nikola on the show tonight. Yes, that's that hydrogen truck. And the endless, well, they just are endless, and they keep exploding higher, particularly the Chinese ones. I thought they reversed at the end of the day, so be careful with this group. Yep, Tesla may be the most influential stock in the market because it has totally broken the mold of what we thought could happen to a car company. Which brings me to the tipping point number 6. The Robin Hood crowd and their fellow travelers. We just use that. This is a shorthand. I know that there's many but it's what people talk about. They go Robin Hood, the hoodies. We tend to view the hoodies as day traders pouncing on short squeezes. But I think they're people who bought stocks at the absolute low in March and April when older professionals were cashing out. They made some huge bets, in some cases with government money, and they've learned how to do their own research. They do not rely on Wall Street research. They can Google it themselves. They can figure it out. They go to the websites, do all the things that they should be doing. I wish Wall Street would stop looking down on them. These younger investors have changed the character of the market, turning into a stock picker's paradise. Tipping point 7, the buyers are overwhelming the sellers right now. In the last few days, we've seen 4 gigantic secondaries: American Airlines, Carnival, Norwegian Cruise, and Plug Power. And each of them got lapped up. It's a virtuous circle right now. The companies get the money they need to stay afloat, and everyone's happy. Dilution seems to mean nothing to these buyers. It does to me, but nothing to them. I want to be careful here, as the market will eventually be overwhelmed by these offerings if they keep up. But it has not happened yet. Tipping point number 8. The environmentalists are coming, and they're about to save the oil industry. The Trump administration has been so pro-fossil fuels that it crushed the oil and gas industry because these companies can't stop themselves from overproducing. I don't know how far Biden will go to rein in the producers, but they got to figure he'll be a lot more environmentally friendly than Trump. That pushes up the price of oil and gas while also giving the alternative energy stocks a huge boost. Tipping point number 9. The trade war is going to wind down. For years, I've defended Trump's decision to crack down on the Chinese government's unfair trade practices. We had to do something because they were running circles around us. But Wall Street hated the trade war the whole time. The business community wants a more amicable relationship with China. I think Biden will turn down the heat. Who's that good for? How about GE? How about Boeing? How about Honeywell? How about 3M? Emerson? Apple? Starbucks? Yes, Nike. I mean, any company does a ton of business over there. You can see it in their stocks. They keep roaring. Finally, number 10. Turns out that Biden's a lot more market-friendly than we thought. Remember during the primaries, I told you the market wanted a Biden versus Trump race because either way, business comes out fine. A lot of people convinced themselves that the Democratic Party belonged to the hardliners. But Biden didn't pick Elizabeth Warren for Treasury Secretary. He picked former Fed Chief Janet Yellen, whom Wall Street adores. Good news for the bank stocks. If he keeps Jay Powell as Fed Chief, like Obama did with Ben Bernanke, then you're going to see an even bigger gallop in the stocks of the banks because they adore Jay Powell too, and not to mention the rest of the market. I mean, you think it's just by happenstance that Wells Fargo broke out today? I mean, Janet Yellen didn't like Wells Fargo, but I think that she's not going to try to break it up. Of course, not everything's going to work out. Tech can be spotty here unless it has a catalyst up its sleeve like 5G, think Apple, or some connection to Bitcoin, think PayPal or Square. Drugs are tough unless you've got some sort of consumer angle, like AbbVie with Botox. So people are going to go back to using Botox. But the bottom line, stick with the tipping point plays. These are the drivers of the incredible move. I've profiled these companies over and over again to you, and that's who's going to be the next leg higher. Even as I think the overheated stocks, like the SPACs, the next Tesla place, I'd like to see them cool off, recharge, so to speak, before they can resume the run. So don't be afraid to ring the register, because what I don't want you to do is have amazing gains and then give them back, like I saw so many people do in 2000.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.